Welcome back. You're tuned into Bazaar Morning Call. Well, we've listed all the top stocks you need to track. So let's get a fundamental analysis going then. Prakash Diwan joins us on the show. Hi, Prakash. Morning. Hope you're having a good morning, Prakash. Well, let's talk about a couple of stocks that may not have such a good start. Zee Entertainment, they've pushed that merger date. Some were really expecting that. But how would you approach the stock? If it opens up a little bit weak, then would you look to buy into it?
Good morning, Nigel. Thank you. I think Z is getting into a stage where there are so many unknowns that are that keep coming, and there seems to be a basic question on whether there is any sort of a intent to get this done quickly. I mean, you've seen so many objections come from so many counts, and none of them have been resolved with any finality or any conclusive nature. So my sense is, it might be too early to start kind of, playing the drum rolls and things are moving fine, and this is going to be finally that behemoth that was anticipated to be created. So I would still want to kind of watch and wait, because it's not something which is really offering any great value if this uncertainty, which is far bigger in terms of an impact, is looming large. So give it some time. Let things go a bit decisively into the right direction. You may end up seeing a bit of an upside post that. That's fine, but at least that there's no time correction that's likely to happen now. So we would like to kind of look at it from a different angle at some point in time later, but not at this juncture.
Okay, Prakash, hi, morning, good to see you in. Would you have a view on any of the IPOs which are opening? There's Muthoot Microfinance, Suraj Estates, Moti Sons Jewelers, Happy Forgings, Credo Brands, RBZ Jewelers. I mean, it's really a Santa Claus end to the IPO market as well.
Good morning, Ekta. Good to see you on Bazaar. I think the IPO market is clearly giving an indication of how smartly promoters and investment bankers are capitalizing on this FOMO that's been built. Look at the intensity, look at the kind of frequency or rapidity of all these IPO issues post the verdict from the 3rd December assembly elections. So it was almost like people had timed it in such a way that if this is going to be the outcome, the next follow-up is going to be. So in just 10 odd days, you've actually seen corporate India mop up more than something close. I mean, I'm not talking about the oversubscription part, but in terms of sheer issuance of primary paper, it's been around 35,000 crores, and that is significant. So what's not happened in the last 4 months is actually happened in the last couple of weeks. And this tells you that there will be a lot of IPOs which will pass through this whole, this deluge of sorts without actually coming up with or offering any quality. I'm particularly not a very big IPO investor fan, because very simply, I feel post the IPO, post the price discovery, you are far better off than kind of just speculating on whether I will get some allotments or not. So it's become more like a game of just applying for it, looking at some sort of a listing bump up, and then kind of negotiating your way forward. But some of the IPOs, the quality ones that have come through, like Tata Tech or even IREDA, those are what you would want to kind of focus on. In the new list that you mentioned, to be honest, I have not found anything very exciting, even from a post-listing perspective. I mean, in fact, there are some of them where there are lots of questions being raised about the credibility of promoters and things like that. So, it's that kind of a season where people are generous enough to kind of apply for anything that's coming, as long as it's primary. But I would wait for some of these older ones to kind of start being available at value zones, and that's what I mentioned earlier. Not looking at these IPOs at all. And the only thing that stands out is that some of these, like Muthoot Microfinance, for example, now they are getting into they are into that business of MFI. It is looking very positive. It could do well for them in the future, but look at the pricing, and from that perspective, it might again not offer you the same risk-reward benefit that you have.
We have a discussion with the IT analyst coming up at 9 o'clock. Prakash, hi, morning. But just wanted your, first thoughts. That's the the latest sector to have joined in with a 7% rally last week. So what's the call here?
Good morning, Prashant. So I think it's more correlated to the expectation of improvement in the situation on the ground in the US very clearly. I mean, as you highlighted from the anticipation of the Fed's rate cut intent for the next 1 year, I think that kind of starts telling you that there could be some sort of a revival. And January is typically a very good time for new contracts to kind of start crystallizing. And if Infosys has, just issued a nominal hike, of course, it's probably token, not something which is very wholehearted. And it's got delayed by a few months. It tells you that there are companies which are very clearly looking at retention now, and retention is usually in anticipation of new work coming along. So if that's the case, you could probably see some revival. I think from a valuation perspective, IT does offer you that cushion. So it's a similar thing which banking did for some time, when the bank nifty was at about 40,000, 41,000, and it's now kind of, almost in kissing distance of 50,000. So you've seen how undervaluation kind of, plays a more important role when liquidity is a criteria rather than just fundamental, seeking fundamental parameters to be improving. But I think IT will probably see some. I like some of the names out there, to be specific: HCL Tech, Infosys. These are names that will probably race ahead faster than the others, while the others might take some time to catch up.
I just wanted your quick thoughts with regards to Edelweiss Finance. They've come out with this Edelweiss Financial Services, rather. They're going to be selling around 10 to 20% stake in Edelweiss Alternate Asset Management. They're probably going to rake up around 1,500 to 2,000 odd crores. Have you looked at the stock? It's done well on a year-to-date basis. But any credence to this piece of news? How would you approach the stock?
This has been a stock that's probably been overlooked by most of us in the market, given the fact that it hasn't been doing much of mainstream activities, as much as some of the other peer group players are. But, the kind of pedigree that it has, the kind of client relationships that it has, it is bound to fetch some sort of, salience when it comes to valuation, right? So I think from a forward-looking perspective, this sector as a whole is going to be extremely positive. The financialization of savings, the kind of participation levels that we are seeing, all of that is positive. But whether you want to bet on something which needs a lot of repair or repair at regular intervals from a balance sheet perspective is the question. And if you actually ask me, I've always played this part without buying into broking outfits or, some of the asset managers, but rather gone for the service providers to all of these. And from that perspective, CAMS and KFin Tech stand out as absolutely clear choices. Of course, CAMS is run up a bit. It's valued a bit more richly, but KFin Tech, to my understanding, is still offering a lot of long-term value. And there is very clear visibility. So you'll probably have a repeat of what CDSL did in that sense. So from that space that you allude to, I would not really specifically look into just one stock and risk myself from a more micro perspective, but from a macro perspective, the other service providers offer far more value.
Yeah, no, absolutely. Got it. Just a quick word on a few big movers from Friday's session. IREDA, right? I'm only mentioning it because it's gone so much. It's gone through the roof. Volumes were super strong. Was down 10%, and there were a lot of pending orders on Friday by the time we closed. A quick word on this one, delivery was another one which sold off sharply. I don't know if you have any thoughts on these names.
So, Prashant, IREDA, of course, continues to be in focus given the kind of love that most institutional investors have also demonstrated for it, and particularly from the FI side. It's a very clear proxy to the renewable growth story in India, and we've seen how the metrics look so positive for a fairly longish period of time. So there's a huge justification for buying it at higher valuations also. But I am from the camp that believes that someday the tide will turn. There will be a lot of the easing out of this FOMO and craziness around buying into some names like this, and you will probably get it at softer valuations without the business model getting impacted. It's very similar to, let's say, a Gandhar oil refinery, which was also one of those co-IPO debutants of sorts. We've seen the numbers come through. There's nothing wrong with the numbers except for 6-7% off on a YOY basis, but at 3,000 crores market cap, some of the, Gandhar has a product suite which is so promising. people have ignored that at the cost of all the interest in IRD. So you'll always have relativity also coming into picture in some of these stocks. So I would wait for IRD to soften a bit before buying. On the delivery, I think it's more to do with the kind of expectation of revival in the e-commerce side. The ONDC part is still not kind of emerging as a very strong number-driven, profitable business, except that some building blocks are getting put into place. But I would believe delivery at this value, at this level, does offer far better value than it did, let's say, about a year back. So from that perspective, yes. But these new age businesses can surprise you on outcomes, particularly on the earnings side, quite dramatically. So you have to take it with that gumption of taking that risk. But there are far better names available in the old economy stocks as well. We'll stick to that. But yes, if somebody has delivery, it's worth a hold, given that there would be revival and that things could repair very fast.
All right, Prakash, we'll leave it there. Thank you very much for your time. Great speaking with you, and have a profitable day, profitable week ahead.